You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 2nd day of February, 2018. So glad you've decided to join us today. If you're returning, welcome back. If you're here for the very first time, a special CFRN welcome to you. We are in our 2nd decade of broadcast history, so please, by all means, pencil us in for the next decade. And we'll see you every day. Okay, let's get cooking. Can you see the chart I have up? S&P 500 Emini Futures. If that's a no, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. Within 30 seconds, you'll be registered for the month. That's right. Okay, in fact, it may be out. A series of seismic developments stemming from the Russia investigation have pit President Donald Trump against FBI Director Christopher Wray, whom he handpicked to replace former FBI Director James Comey whom Trump fired. Trump and Wray have increasingly been at odds over a change in FBI leadership and the release of a controversial memo that purports to show the Department of Justice abusing its surveillance authority against a former Trump campaign advisor. Tensions between Trump and Wray will likely come to a head over the next few days as Trump is expected to approve the release of a memo on the purported surveillance, despite Wray's repeated appeals not to do it. Please don't do it. Well, Special Counsel Robert Mueller, who was tapped by Deputy Attorney General Rod Rosenstein to spearhead the investigation after Comey's dismissal, has so far brought charges against 4 individuals in Trump's orbit: former campaign chairman Paul Manafort, former campaign advisor Rick Gates, early foreign policy advisor George Papadopoulos, and former national security advisor Michael Flynn. Boy, when you say that out loud, it does sound bad, doesn't it? This week things grew particularly heated, or last week, when Attorney General Jeff Sessions reportedly pushed Wray to oust FBI Deputy Director Andrew McCabe after months of Trump publicly attacking him and characterizing him as biased in favor of Hillary Clinton. Wray refused to do so and instead threatened to resign if McCabe was removed. McCabe was ultimately dismissed from the Bureau earlier this week, but Wray told him it was related to the Inspector General's investigation into McCabe's handling of the Clinton email probe during the 2016 election. McCabe's defenders raised questions, however, about the timing of the move and whether Wray had caved to pressure from Trump and Sessions. Boy, this will go on and on. There'll be books. There'll be movies. But wait, there's probably even more. Hey Dan, happy Groundhog Day to you. How many of you knew it was Groundhog Day? So, what's the scoop? Did Pakistani Phil, is that his name? Did he see his shadow or not? And what does that mean?
If he did see his shadow, then there's 6 weeks of winter left. But I don't know if he did. Yeah, let me look it up.
The plot thickens. Alright. Let's see what's else going on in the big picture. So the memo is yet to be released. A little tension over the next few days. U.S. economy adds 200,000 jobs in January. Now, we talked a lot about these economic reports today, and that if they were good, boy, they could definitely push the market higher. Remember back in the day when good news sent the market higher and bad news sent the market lower? U.S. employees hired more people in January on net than economists had forecast. Wage growth, which has been sluggish through much of this economic expansion, increased at its fastest rate since 2009, year over year. Non-farm payrolls increased by 200,000, beating the forecast of 180,000. Unemployment remained at a 17-year low of 4.1%. So, the news beat expectations, and you can see from my chart, from your screen, what happened. Came right down to the weekly zone at 2790/91, and that would be the lowest weekly trading zone for the week. Now we hit it right here and bounced. Goodness, does that candle have? It has a high. Actually, we bounced to here. So from 91, we bounced 11 points. That's an 11-point bounce. Remember, not too very long ago, we went through a period where we were blessed to have an 11-point range in the whole session in the S&P. It was really tight there for a while. And now, not so much. And boy, it's trying to dig its heels in here. It dug in once, gave an 11-point bounce, came back, spiked it just a little bit, and again, trying to put in a toe hold, trying to consolidate. We'll see. We'll see if they can do it. So what happened to Phil?
He did see a shadow, so we're not going to get an early spring. We have 6 more weeks of winter.
Poor Phil. And people are going to hold him responsible. That's the thing, you know.
His full name, ready for this, is Puxatawny Phil, Seer of Seers, Sage of Sages, Prognosticator of Prognosticators, and Weather Prophet Extraordinary. That is his full name.
Wow. You know, I think some of that's made up.
You think?
I'm going to go with it for lack of anything better to go
Okay.
with.
All right.
The Dow is down 372 points. Now that's the cash market, folks, not the futures. We'll get to those in a minute. Dow Jones Industrials cash market down 372 points. That's 1.5%. The NASDAQ is down 76 points. It's a little over 1%. S&P 500 down 31 points, a little over 1%. And the Russell 2000 down another 21 points. So on the session, that puts it down more than 1.25%. Suffice it to say, color of the day in the US of A, red. Red and more red. In the commodity basket, crude oil down $1.03, which is 1.5%, trading 64.77 the last. Gold down $14.10, a little over 1%, trading 1333.80 last. In the Asian markets, it's the only mixed market we have. Nikkei closed down a little over 200 points, almost 1%. The Shanghai was the little spot of green today, up 16 points, 0.5%. And the Hang Seng down 40, which is, for the Hang Seng, not much, basically flat. Last but not least, the contagion continues in Europe, where the FTSE closed down 50 points, a little over 0.5%. The DAX down 218 points, a little over 1.5%. And the CAC was down 90, again, over 1.5%. Pretty brutal, tough Friday. We don't know how we'll close. Plenty of time still for the buyers to step in and give us a bounce. Now the first bounce took us to here. This bounce, it would be comforting to see it put in a slightly higher high. And then maybe Sunday night, we start working our way back up. Remember, we had good economic news today. And this is the results. And not only did the S&P sell off, but gold took a tumble too. Our get short number last night on the Concierge Trade Alerts was either 1346 or 1347. When I come back, I'll pull it up and you can take a screenshot of the numbers from last night, and then we'll take a walk through them. But for now, Michael is going to give us a recap of everything that happened in the live trading room today. So Michael, if you're ready.
Yes. Okay, I am ready. I am ready. Willing and able. There we go.
Okay, I got it. I'll hit mute and I'll be here.
Okay. All right, thanks. Here, let me slide this over. Big sigh. All right. Good afternoon, everyone. Today is Friday, the second day of February. 2018. Right here at the top of our homepage, there's a banner that drops down that says sign up for the CFRN live training room, 100% free trial, user indicators, learn our strategy. Click here. That's what you need to do if you want to take our free trial. Okay, you click there, and then you will be brought to this page right here, where all we ask for is your email, your first name, and how you found us. You hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click on that confirmation link, we don't know that you took the trial. All right. All right. Spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. As I said, today is the 2nd day of February, 2018. Today we made 10 ticks on the Russell and 14 ticks on gold. That put us at 190 on the morning. 190. Okay, today it took 22 minutes and 1 trade to get the goal for the day, and at that point we're up $100 a contract. We took a total of 7 trade opportunities today. Okay, so on the month now we're at $290. So over 2 days, averaging 145 per day. That's 1 contract, 2 hours per day. And on the year, we're at 2808. That's over 21 days, averaging 133 per day. Okay, 133 per day. All right, let's take a look at what happened or didn't happen. On gold right here was where we got the goal for the day. We went, we went short right there, and we took 10 ticks profit down here. The next one was over here, and I totally missed that one. I could have taken a lot of profit on it, or a decent amount of profit on it, but I must have gotten distracted, and I ended up getting a break even on it. Okay. I missed the short right there, and then the slingshot was not giving us any opportunity on the short side. Okay. We had a break even right in here, and then we picked up 4 ticks right there. Okay, we missed that trade right there, and I don't know why it went down like this right here, but it didn't give us a trade setup to take with that. You know, it consolidated right here for quite a while, and then it just tanked. And then there was a long opportunity off the BBC right here. This was during the break. Another one right here during the break. And lastly, well, now the cycle was going down too steep. So you had 2 opportunities there during the break. Okay, and we ended plus 14 on the gold. Now on the euro. Come on, spread out, euro. There it goes. Okay, the euro had just a ton of movement this morning. But again, I don't know what I was doing when this was going on right here. But we ended up missing that, and there were a few opportunities in there. Okay. Then it changed directions. Well, first it gave 1 more opportunity right there, then it changed directions, gave a few more opportunities. And during the break, yeah, you see the slingshot was all messed up here during the break. When you get a big run, one way or the other, it's usually going to be followed by the slingshot, the cycle particularly, being all messed up for a period of time. And then it finds itself and corrects itself. Okay. Crude oil, we didn't do anything with crude this morning. But that's not to say that there wasn't anything to be done with crude. There was a short right there. Then we had to break through this dynamic support. So there was another one there. And the cycle was going up too steep here. It changed direction, started going long right there. Long over here. And then during the break, it was pretty choppy. Okay. Now the Russell. Well, let's scroll back, because there was some movement here on the Russell. The ES being all over the place like it was, the Russell was too. Hang on, my charts are loading right now. There they go. All right. Well, we missed the first one right here. All right. And then changed directions, and there was a bounce off the BBC there. And a momentum long right there. Changed directions again. And there was a short right there. Okay, and then tried to change directions here, but it didn't. It failed to change. Then there was a short right there, and another short for that leg down right there. changed directions again, went long right there. And yeah, we would have needed a higher swing. Okay, so it changed directions again. There was a short there, a short there, a short there, and a short here that we actually took and got 8 ticks on. Yeah, changed directions again. There was a long right there, a long right there. Okay, along there, along there. And right here, it changed directions again. We took a short there for 2 more ticks to put us at plus 10. Gosh, and this is only up to 11 o'clock. Changed directions again, and there was a long there, then a short there, a short there, and a short there. Changed directions again. This thing was all over the place today. I mean, it's just whipping back and forth and back and forth, but there was a long there and a short there. And then we get into the break. Okay. Now, we had to put in a lower swing and break dynamic support, which we did right there. But then the cycle had to be right. See right in here, the cycle's all messed up as it's continuing down right here. I'm going to look at something in a minute that we looked at in the partners meeting last night that some of you might think is intriguing. Okay, so we had a long right there, a long there, a long there, and then the cycle started going down too steep. And right now it's setting up a short. Okay, that was a lot. That was a lot of opportunity there on the Russell today. Scrolling back. Here we go. On the ES. I'm just looking at the slingshot down here. Just the way that it all came together. I only highlighted 1 trade on the ES this morning. Right there. Oh, 2. There was another one right there. Going down to the zone. All right, so really not a whole lot of opportunity here on the ES. I think this is our lowest weekly trading zone, and we're trading just up above it right now. All right, the thing that I was going to show you was the Russell on a 30-minute chart. Okay, you see the setups are the same on a 30-minute chart as they are on a regular chart. See, price pulled back up, hit the BBC right here, then it bounced off it. So you would draw your trend line on a 30-minute like this. Would have gone like that. And the next down close below that was right here at 65.1. And it dropped all the way down here. Okay. I just wanted to point that out. The setups are the same on the larger time frames. The risk on a trade like this would have had to have been up here. Okay. We went over that last night in the partners meeting. All right, back here. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today's the 2nd day of February. We made 10 ticks in the Russell and 14 ticks in gold. So plus 190 on the morning. Today I took 22 minutes in 1 trade to get to the Gulf today. At that point, we were up $100 a contract, and we took a total of 7 trades. On the month now, we're at 290. That's over 2 days, averaging 145 per day. And on the year, we're at 2808.75. That's over 21 days, averaging 133 per day. Okay. If you have not taken a free trial, then go to the home page. Right here at the top, it says sign up for the CFRN Live Training Room, 100% free trial. User indicators on our strategy. Click here. When you click there, you'll be brought to this page. Right here on this page, all we ask for is your email, your first name, and how you found us. Hit that submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click at the confirmation link, well, you don't get a free trial because we don't know you took it, all right? All right, and when you click on that confirmation link and you're sent all the information, you have to actually show up for the free trial. Okay, just clicking on it and getting the information doesn't mean you're going to be in the free trial until you actually show up for the free trial. We have so many people that click the link and fill out the form, and then they just don't show up, and they're wondering why they didn't get a free trial. Then they come back like a week later, 2 weeks later, saying, "Oh, well, something came up and I couldn't make it." Well, if something comes up and you can't make it, don't fill out the form. All right, don't click the registration link. All right, that's it. With that, I'm gonna quit. I'm gonna quit that. All right, with that, we're gonna pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne is ready, but his audio is not on. It does not seem.
Oh,
there you go.
it's on now. Yeah, I found a different way of doing the mute that actually works. As I was just saying, I forget what I was just saying. What were you talking about?
I was talking about how people fill out the form and they don't show up.
Oh, yeah.
That's what I was saying.
Yeah, that happens.
And it's a shame.
Bitcoin could be heading for its... Oh, I know what I was going to say. To anyone that wasn't tuned in yesterday or the day before, we made a second video about how to go get your My Ether wallet. If you participated in the CT Global Token pre-sale, we have planned February 14th as mass distribution day. And so in the video, which you'll find at youtube.com/CFRN, also at emini.cfrn.net, we walk you through the process of getting your digital wallet. We will need your address so that on the 14th we'll be able to transfer your tokens into your account. Now, there's a lot of caveats at myetherwallet.com, a lot of cautionary stuff. Don't gloss over it, okay? Read it. It's all very important. And I try to make that as evident as I could in the video. And I'm sure we'll do another couple videos. We'll talk one day next week about the best hardware wallet to have. Because once you get it in your digital wallet, you want to put it in your hardware wallet so hackers can't get at it. So, having breached the psychological support level of 9,000, Bitcoin fell to $8,056 at 11:39 UTC, its lowest level since November 25th. On a 24-hour basis, cryptocurrency down 14%. It's worth noting BTC prices on Korean exchanges now traded at a discount to prices on Western exchanges. So that 8,000 number that we had talked about, or that I had mentioned, that looked like a, worst case scenario kind of support. Well, at the time we hadn't rallied quite as high as we ultimately did. And so the pullback to 8,000 didn't seem quite as severe, but it doesn't change the fact that 8,000 to me did look like a potential spot, and it looks like we're finding out right here, right now. Okay. Yeah. This area right here, and this area here. That's that 8,000 area. If I could draw a little rectangle across there like I did on the So we should now be at about a 62% retracement. I wish I could draw fibs on this thing. Anyway, so that's where we're at on Bitcoin. I'm glad we built on the Ethereum blockchain. In other crypto news, what else is out there? Ripple's down today. Neo and Litecoin are down. So, yeah, everybody's moving to that other side of the boat. See, everybody got on the long side of the boat, and this is what happens. So now once everybody gets comfortable, they get all the deck chairs moved over to this side of the boat, then we can see things run the other way. And what can we do? We can wait. Well, there must be something else we can do. No. All you can do is just wait. Wait and see what comes next. Now, Apple reported Q1 earnings yesterday, in which it announced that it sold fewer iPhones but made more profits than ever. $20.1 billion in the quarter. It sold 77.3 million iPhones, which is a small decline of 0.9% over this time last year. It also sold 13.2 million iPads, which is up 1% year over year, and 5.1 million Macs, down 5% year over year. Along with, let me go back to the S&P chart, you can see this. Okay, so when the earnings came out last night, we did get a little gap higher. I mean, let's see, the close was 28.23. Then we gapped higher on the open last night to 28.2650. So we had about a 3-point higher gap. Considering the earnings that came in, whoa, you might have thought you'd have got better than a 3-point. Considering the context of the volatility of the past few days, it's been pretty substantial. Now, that lowest weekly trading zone has held again so far. Okay, first time it hit it, it was rejected. This next time, you know, it had to work its way back up. Now, that was like a knee-jerk reaction there. It came down, big red angry candle, 30-minute candle. Looks like the world's gonna fall out. Boom, bottom's gonna fall out. And what does it do? Whoosh, right back up to where it opened. But it struggled, came back for another taste, and this time it looks like we built it back up on a kind of a solid foundation. We'll see. We shall see. You know, a little trend line. Just, it's not a major trend line of any kind. It's just a little simple guidance. Okay, we could run up, hit that, roll back over. If we get on the other side of it, we might pull back to kiss the top of it, Trader Vic style. This would then hold as support across here, and from there we head into Sunday night. Now, yesterday at the end of the radio show, I said I'm going to extend this rectangle that I've drawn, which has been support, support, support. I'm going to drag it up right next to the candle that we were on when the show closed. Okay, and look what happened. Price rolled back over, and we talked about the fact that next time it'll probably come down to test the bottom of the rectangle. Then we had that gap higher open. It came back to test the bottom of the rectangle, and then we bounced and it rolled, and we finally got a close. Yeah, this is the one I would have gone with. Close below the rectangle, still plenty of room to run to the zone. So an entry here at 2808, we dropped to 27.97 at 11 points, and then a bounce, a leg and a retrace, and then a leg, which took us all the way down to 9. Now I do also remember saying the words yesterday, that the distance between this zone and this zone is 40 points roughly, and that seems like an awful lot to drop. But I also remember saying yesterday that by the time we talk tomorrow, because price was right in here somewhere, and I said by the time we talk tomorrow, I'm confident that we will have visited 35.36 or 90.91. There are very few absolutes in the world of trading, but I was absolutely positive that that was a high probability. It came to pass. Yay. Alphabet, Google's parent company, reported a $32.3 billion revenue in its Q4 earnings, up 24% year over year, but suffered a $3 billion net loss due to a $9.9 billion tax charge. Google missed analyst expectations. I thought they all beat, but they didn't. Amazon beat Wall Street expectations with $60.5 billion in revenue, up 38% year over year. The company also announced that throughout 2017 it hired more than 130,000 new employees, bringing its total workforce worldwide to 566,000 people. Google also announced that its Google Cloud business, which comprises the G Suite and the Google Cloud Platform, has grown massively over the last year. It now generates $1 billion per quarter, but it's still smaller compared to Amazon's web services. AWS. When you go into a website, a lot of times you may see it flash up there in the address bar, AWS. That means it's headed to the Amazon cloud. The CEO of Airbnb announced that the company won't go public in 2018. A lot of folks were waiting on that. Airbnb also said CFO Lawrence Tosi has stepped down to focus on his investment fund, while Belinda Johnson has become the firm's first chief operating officer ever. So it's just so amazing to me in this economy, in this world that we live in today. One of the, I'm assuming, the most highly valued ride service, ride service for lack of a better term, they're not really taxis, has such a rich valuation, but yet the company owns no cars. How clever. And this Airbnb, I'm not sure what their valuation is, but it's astronomical, and they don't own any bed and breakfasts or beds or sheets or pillowcases. They don't have to get up and cook anybody breakfast. Airbnb. You know, incredible times we live in. YouTube TV now available on select Roku devices for $35 a month, as well as Apple TV. YouTube also announced that it's bundling over 50 channels into the offer. YouTube has announced that YouTube Go is now expanding to over 130 countries. The app's designed to consume less data and popularize YouTube in countries whose network infrastructure is still in development. Now, for all the Instagram folks, and I'm not an Instagram folk, I think I opened an account and posted one picture, and then I just didn't catch it, I guess. They're rolling out an update to the app that will now let you post stories with just text. You will not have to take a photo. The feature, called Type Mode, is adding new styles, colors, and backgrounds. And in case you didn't know, Instagram is like the hot thing, particularly amongst millennials. I don't know about other demographics. Nintendo has confirmed a new subscription service called Switch Online. I guess will be an online version of the new Nintendo Switch, which has gotten very high reviews. Will launch in September for $3.99 a month. Pretty good deal. You figure over the course of a year, Okay, 12 times 4, 48. You're gonna spend $48. I don't know what the Nintendo Switch goes for, but a year from now there'll probably be a newer, better, faster, sleeker gaming console, and so renting may be the way to go. And last, in tech news today, Twitter has debuted a full-service search archive API. It will allow access to all tweets ever published. This is for developers who want to include this type of information or give their users access to this type of information in their applications. The API will cost $99 per month. As an individual, they used to offer this service. You could put in a request to have your entire Twitter history since the very first day you logged on, and it would take a couple days, but then they would send it to you in some kind of file format or notify you, and you'd go download it. I did that when they first offered the service, and I haven't since, but I do remember my very first tweet. It was I can't remember how old Gabe was, but he was pretty young, and it just said, Gabe and I are sitting on the couch watching TV, because I didn't know what else to say. I mean, and why would anyone care? That was the big thing. No matter what I put in here, who's going to read it, and why would they care? Well, it kind of caught on now, didn't it? All right. I don't see John, so let us giddy up over here and take a look at a couple of these Concierge Trade Alerts from last night. Yes, Mike.
I was just going to say, John did respond to your email and said okay, so he'll probably be popping in here.
So he'll be popping in any minute. Okay, thanks very much. I appreciate that.
Okay.
How do you know he replied to my email?
It was a support email. It must have been, because I got it too. Yeah, it was support at Christian Traders.
Oh, I got to fix that. The other day that actually got set as the default in this one, and so anyway, I got just a reminder to myself to correct that. All right, guys, I'm going to bring up the Concierge Trade Alerts from last night, so if you want to grab a screenshot of them before we start to talk about them, by all means do. And if you have any questions as I go through them, don't hesitate to ask, because these email alerts could have, if they weren't in your inbox last night, they could have been in your inbox last night. And I do apologize for the typo on gold. If you look at a chart, I don't know, to me, I guess because I created it, it seems like, well, anyway, I'll show you, and then you can decide if I need to be taken into the town square and horsewhipped over this. But sometimes my humanity shows up and I make mistakes. Okay, last night they got out at 8:35 because we had the workshop at 9, and these are them. Okay, gold, we wanted to consider buying 1359 if we were given the opportunity, and if the market did not afford us that opportunity, we wanted to sell 1346. If we had dropped down to a 1400 number, that wouldn't have been good. If we'd have dropped down to, but then again, a person doesn't know that that's just a typo, So, I mean, I know it because when I look at the chart, I see it. Okay, I'm sure you've had time to take your photo by now. You go to gold. So the 13, it was to be long 1359, okay, which we never got anywhere close to, and sell 1346. So I apologize. And I'm surprised I didn't see that email last night. I'm not sure what time it was sent. But normally, when something like that happens, if I'm notified in time, I will send out an email to everybody. I think by the time that email was sent, this might have already, well, you get the picture. So 1346, which turned out to be, turns out, pretty good trade. Now here we had a hot knife through butter. Typically when that happens, don't see it a lot, but we do see it, and when we do, the most common thing is consolidation, then rejection, then a hot knife through butter. Consolidation, 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 rejection, more consolidation. This is the rare bird, and typically what happens is price will, if it slices through, it will come back to the zone it sliced through, consolidate, and continue in the direction of the slice. Now, based on historical observance, that's the most common thing to happen. Does it always happen? No. Nothing works all of the time, and everything works some of the time. So remember that. Now from 1346, this thing dropped to a low of 1330. That's, because it says 0.1, we won't call it 40, we'll call it 45 points. That's $4,500 per contract. Leave it to me to do a typo on that one. But if you've been trading the zones for any length of time, and if you're confident I got the long side right, 59. When this happens, guys, just call the toll-free number, do something, get my attention. That's, what a move, and what a turnaround. Is that John I just see popping in? It is indeed. All right. As soon as he comes on the line, I'll open up his mic. Let's go back to the ES. So we know what happened on gold. And comes his mic. All right. And on the ES, we were looking to sell 2807, which was this area right down here. Important prices, important areas, almost always tested. Yeah? Okay. So what did it do? At 2807, it initially dropped to 2797. That's 10 S&P points. Got back above the trigger and made it all the way down to the zone. This is our lowest weekly trading zone for the S&P. It bounced. It's come back to revisit it. Bounced. And unfortunately, we put in a lower high on that bounce so far. So it's coming at it again. Let's see if it's going to be able to hold, and let's get John's mic open. Hi, John. Welcome to the show. No, seriously. I really do mean welcome. Okay. Well, we'll leave his mic open, and he'll pop in there in a minute. So again, consider selling 2807. Now this first move, most recent swing high, we've been way up here at about 23. Okay, so on a 30-minute chart, your risk would be too much, and you would want to look for you look at a smaller time frame to see if you could get a valid entry there. If not, then you just wait until the market hands you that valid entry with less risk. Here we're talking about a 3-point stop. Your risk on this, $150 per contract, and from 91, so you got 9, that's 16 S&P points. Sweet. I'll go over those in more detail. John, welcome to the show. John? John? I heard John. I think he might have his headphones turned off. Let's see. Hey, John, I know you're live, but we can't hear you. Okay. Are you there now? All right, well, it'll sort itself out in a minute. Okay, so from 2807 down to swing low at 97, that's 10. Yeah, hi, John. John?
Hello.
Yeah.
Hello. Hold on.
Okay.
Hello.
Hi.
Hi.
Welcome to the show.
Yeah, thanks very much. Well, you know, when we talked about that sideways trading yesterday, you know, it was either going to break up or break down, and you know, I mean, to be fair, the market initially did take one more shot at the highs late in the day. Actually, the S&P was an underperformer, but the Nasdaq did go substantially higher last night before it broke. And I fortunately took the initiative to sell everything right at the peak of that rally yesterday afternoon, when the Nasdaq was more or less at its highs. So we went short right across the board. So far we've done a pretty good job of we've caught a couple of rallies, 2 or 3 rallies, and shorted again. And right now we're back short again. The VIXs also, we got the VIXs. Went for them yesterday afternoon, just before, you know, as a kind of an insurance policy. The Maxim has actually went positive twice today already. It's which is a good indication that the takeover could be close. If that stock did get taken over the weekend, that would be probably very good for the market on Monday. So it's worth keeping that in mind, or any other takeover for that matter. The fact that it's acting as well as it has today is quite, you know, there's obviously somebody knows something, because for the stock to really rally from $60 all the way back up is really quite impressive. And if it closes anywhere up around here, it'll be closing up on the week, unlike a lot of other stocks. So, you know, all in all, it's a pretty good deal. We also got pretty lucky last night. In spite of my bullishness on the grains, we sold them. You know, I didn't like the way they opened last night. I thought it was kind of, you know, I really bought them because I thought they might gap higher. When they didn't, I decided to sell them, thank God. And we bought them back this morning near the lows. And we also did the same with the gold and silver, right up around 13.52 or 3 last night, and the silver up around 16.20. And we got long right at the bottom. And right now I'd sell them because they seem to be coming back a bit, but I'd be ready to buy them again, because there's a reasonable chance they could go positive today before the day's out. If they do, I would, by the way, palladium is acting extremely well. It's up $16 today per what I said yesterday. The lumber's up $7.20. And palladium is streaking higher, which is maybe don't sell the gold, just stick with it. I think it might even just go from here. The fact that it's cut its losses in half is really, really impressive. And the gold stocks are turning higher as well. You know, I think a lot of this market weakness is actually because of this memo. And I'd like to I'd like to say a few things about that.
Yeah.
Haven't seen the whole story about what's going on yet.
When's it going to be actually released?
It's out. They're talking about it.
Oh, it is.
But
Okay.
yeah. Now, remember what I said about Carter Page? He's actually suing the government, I think, for for going after him in a false way. Carter Page statement of Fox News: the brave and assiduous oversight by congressional leaders in discovering this unprecedented abusive process represents a giant historic leap in the repair of America's democracy. And as you know, Trump said the whole thing was a disgrace this morning. People should be ashamed of themselves.
Right.
Because I mean, this is like school. This is kind of like schoolyard tactics of these Democrats, carrying on and going on and on for just all this garbage, millions and millions of false words uttered on CNN day in, day out, MSNBC. It's an absolute outrage. It's a total and utter disgrace. It makes you feel sick to your stomach, But these people all these sort of grown men and women behaving like in such an underhand and disgusting way. And you know what? To stick it to them today, guess where Trump's... Remember what I said? What did I say on this show months ago? 50% it's coming for Trump? Mm-hmm. 49% today. Up 4 points on the Rasmussen. And if you don't follow the Rasmussen, as far as I'm concerned, you're brain dead, because it's the only poll that's worth anything. It's the real deal. And if he's 49%, I already said, he's got another 5 or 10 points up his sleeve. With this kind of an up move, just like charting, it's a breakout move. He's been basing out for a whole year, and I think his approval rating is going to go 55, 60 before you know it. So, especially if he does something, to take care of North Korea, that'll be worth at least 10 points. So, kudos to him. He deserves it. He's done a phenomenal job, and exposing this outrage is, probably going to be worth another 5 or 10 points. So here's what he says. Carter Page, statement of Fox News: now that a few of the misdeeds against the Trump movement have been partially revealed, I look forward to updating my pending legal action in opposition to the Department of Justice this weekend in preparation. Hang on a sec. Just coming. Next page. For Monday's next small step on the long potholed road toward helping to restore law and order in our great country. You know what? I really salute this guy. Give him a here, and 3 cheers, because, he just because he happened to be who he was, with being the head of Merrill Lynch in Russia, and they went after this other guy, Caputo. Michael Caputo, he lived in Russia in the 90s. They went after him as well, just because he lived in Russia. I mean, can you believe it? And they're saying, they put out all this garbage about that the Russians were trying to recruit as a spy, and they concocted all this in this dossier. I mean, it's just an absolute outrage. The whole thing, it's just a disgrace. So, as far as I'm concerned, it's a great day for America today, and I hope everybody agrees with me. So.
Well, I do. So the memo's been released. What is so damning about this memo?
Well, I think it's connecting the dots, and it's that they basically set this guy up, and they went to the judge, and they got this FISA. He was the reason they got the FISA thing, and partially the dossier as well on supposed dossier on Trump, which was just basically taking his travel itinerary for the last for the 2013 Miss Universe, basically, and putting that in there so that it looked like it was corroborated, and they even went as far as putting Cohen's trip to Prague. He'd never been there in his life, so it just shows you what a scam this thing was. The whole thing is just sickening.
Okay, they said he went to Prague, but he's never been to Prague.
Exactly. And other stuff like that. There's all kinds of inconsistencies. But it's like I said to you, I could write a dossier about you going to Uganda.
Sure.
And you could say all kinds of things of what you might have been up to, which right. you could arguably corroborate. So it's just a ripoff. It's just disgusting. And to think that these people were colluding at the top to do all this and to create this. And, I'd say Pelosi and Schumer and probably Obama and Hillary, they're all in on it. It was just a giant and a disgraceful plot. A dastardly plot, it's one of the worst things that ever happened in the country, in its history. Just terrible. Absolutely terrible. It's just like that tweet that Trump put out, terrible. Obama was being wiretapping me. Well, now he absolutely was. There's no doubt about it. And everybody's saying, oh, that's never been proven. That's wrong. How many times has CNN said, that's never been verified? I mean, just a million times they've said that. It's just absolutely a disgrace. Just sickening. They should be fired, the whole lot of them. Honest to God.
We always think of these, or we always hear the stories of the third world countries, and the corruption at the highest levels of government. And we supposedly should be this shining example to the world. And on the world stage, we don't look so good.
We sure don't, because
not only because of the corruption. I mean, you got the corruption issue on one hand, and then on the other hand, you've got how the media has behaved for the first year of their president's, time in office. People have got to be scratching their head. Well, I guess those Americans, they make a nice pair of blue jeans, but they're not who we thought they were. But yet we are. We, the American people, remain the American people, and we're embarrassed and ashamed of those in high places who are making our country. The Statue of Liberty. I mean, her face is red right now. She's looking down. She's hanging her head down, looking at the water, looking at her feet. She can't believe it. I think the lamp just went out. The torch.
And you know what? I said Trump is going to come out of this shining like a knight in shining armor, and he's really starting to look pretty good. And people are gonna reason, this guy was being right all along. It's all going to come undone. I think it's there could be hearings. I mean, look, it took a long time for Watergate. It took years before the Watergate thing actually got momentum and got going. And this looks like this could go the same way. And when how do you think Americans are going to feel when they realize this whole thing has been perpetrated on them in a gigantic scam? Just wasting time for 2 years. It's just absolutely diabolical. It's unbelievable. So where does it end? I don't know, but look, there's a reporter at the Wall Street Journal, and she's pretty low, straight shooter, like Cheryl Atkinson as well. She's an excellent reporter. Listen to what she said. I'll read some of these things here. I've covered politics a long time. I have never seen anything approaching the desperation that Democrats have to keep this memo quiet. As we know, that worry about law enforcement, Snowden Manning, is not their biggest worry. This memo must be damning to the core. Have been in journal all my life. Have never seen the press corps fight so hard against transparency. Same media that after the election wondered if it was out of touch with average Americans now ignoring the legitimate worries so many have about government accountability. Every journalist should be asked if they're fighting this hard against disclosure. If it was Bush, DOJ, FBI accused of wiretapping abuses, of course not. They'd be leading the charge to put it all out. The fourth estate is supposed to enlighten the people, not cover up for government officials. Pretty good tweets, huh?
Yeah, well stated.
Yeah.
Well stated. Now.
Yeah. So we'll see what comes to light thereafter. But there's by the way, there is a danger that we could really tank today in this market. Just
we're doing
because
doing a pretty good job of it.
Well, I think the this market has been tanking because of this worry about this memo and what it could unfold, what could unfold. And we've fallen almost 1,000 points now since the since the last top, and that's a pretty big hit for a week. There was a couple of giveaways here the last few days. Like yesterday there was a gap higher, and that sold off.
Right. You're talking about right here last night on the Globex Open, because the earnings of the big three, only one of them missed.
Yeah.
And which one was that? Was it Alphabet? I just read it.
Google's
the one that missed. Okay.
Yeah.
Well, that's actually ABC now, right?
How do you mean by ABC?
I'm sorry, Alphabet. Isn't that the new name?
Yeah,
Alphabet. I don't know where'd they come up with that, but anyway. We had a 3-point gap higher open, which, I suppose, in ordinary times, that would be respectable enough. But, look at this 30-minute candle here from yesterday. It dwarfs this little gap higher open. You would just expect more, or I would anyway. And so remember, there was a time when good news, the markets rallied, and bad news, the markets sold off. I would consider 2 out of 3. I know one of them beat expectations. Did 2 of them beat, or did 1 meet? Do you know?
Sorry, say again.
Okay, Alphabet missed. Amazon beat expectations, correct?
Yeah.
And the third one,
Microsoft.
Yeah, did they meet or beat?
See, they probably did all right. I think they beat it a little bit, but they're coming off a bit right now. They're down about 2 points, $2.
Amazon's revenue is up 38% year over year.
Yeah, Amazon is awesome.
566,000 employees worldwide. In just 2017, they hired 130,000.
Yeah, it's pretty amazing. By the way, we got a knack of. Remember the last time when Amazon peaked on an earnings, we got within $1 of the high.
Mm-hmm.
Short, sold and short. We got short at I think it was 1494 this morning, and it's currently at 1460. So look, I didn't know. I just took a shot at it. A lot of stuff I've done the last few days, I can't believe we did, but we did. So it's going pretty well, including getting out the grains last night, because that was a bit of a tough call. So and the gold. Look at the gold now. Gold's starting to look really, really good here. By the way, I've definitely go long the grains again. If we close over about 98, 983, 84 on the beans, I'd probably take a shot at going long. And the wheat, I think you can almost buy it right here, and the corn as well. The sugar also looks like it's started a bull market, and the silver. I think gold getting back above 1340 is probably good enough for me to take a shot at it. It's not a guaranteed type of trade or anything like that, but just think that the way that they're acting, this was sort of a pullback. Remember, the interest rates are bullish. By the way, look, we got down to our 145 target this morning. That's another reason why the market's tanking.
On what now?
But on the bonds, 145. Remember, it was 147 yesterday, and we said 145. There it is. It might bounce from here, but boy, this is an awfully low number. We haven't been here for years, and look, closing down 145 on the week doesn't really, give much comfort to the possibility of a rally anytime soon. You know, there might be a bit of a rally. It's just kind of like the dollar this morning popped back to 89, and now the currencies are starting to go back up again. So the dollar just, you know, this is very bad for the dollar. And, you know, I would also say this, you know, if we do cut our losses this afternoon, and I wouldn't rule that out, because, you know, what you have to realize is this is a little bit like the 2000 era. And, you know, you had these heart attack pullbacks in stocks, maybe like Amazon, right? Remember, look, the exact same thing that happened at Amazon happened in Netflix a month ago, right?
Right.
You had a bit of, in fact, I remember I said we sold it at 190, no, we sold it as, maybe it was, I forget what it was now, but we scalped $5 out of it, off the earnings. The last time we sold it at 206, and it went all the way down to 178, and we maybe covered it at 180 something, all right, and went long. This time it maybe it was 255, and it came back to 250, right? We went long at 250, and then we sold it again. So yeah, that was off the earnings, and then it ran up to 286, right? Imagine where Amazon is going if the same thing happens to Amazon. So this is kind of identical. In other words, we've gone from 1490, 1498 this morning down to about 1445, or no, actually 1430, and we're 1460. If this thing goes like Netflix in the next few weeks, you know, the market's going to go a lot higher. So the point is that while the interest rates are short-term negative, the market gets used to them after a while and starts to get more valuable, because the interest rates are finally saying that the economy is getting stronger. And the Atlanta Fed came out yesterday. They're predicting 5.7% growth in the economy, which, as you know, you heard it here first. How long ago did we say 6.6% growth coming in the U.S. economy?
Yeah, sure did.
So, right. So, and I think this is the beginning of it happening. You know, the one thing that nobody really gets right now, or very few people, is we've never been, look, we're not just making all-time record highs in like numerous markets around the world and numerous indices in the U.S., but we have a synchronized global recovery, the likes of which we've never seen before. And on top of that, we got a weaker dollar, which is making American goods more competitive. So it is all the strangulation of the last 8 years with a stronger dollar is being taken, unshackled, and it's actually, remember, the rest of the world is kind of getting richer versus, you know, the rest of the world's currencies, which have been in the doghouse for the last 7 years, are starting to become more valuable. So the whole world is it's lifting all boats all around the world. The weaker dollar is very bullish for the world economy, and it's just great. I mean,
I've said for some time that there are traders and brokers on Wall Street and around the world who have never really experienced a down market, and I've been saying that for so long that some of those people on Wall Street are now working their way up into middle management. This goes on much longer. You'll have upper management guys who only know how to trade in one direction, and that's long. And that's a bit worrisome, I think, that it's like a foreign language to them. What do you mean stocks can go down?
Yeah,
the indices can actually.
Well,
keep going down. I mean, sure, they've seen pullbacks, they've seen routes and things of this nature, but let's go back to that ES chart. Okay, now
look,
this is important.
We're either going to tank this afternoon big time, maybe 1,000 points a day or something like that, or if we cut losses and turn back up, it'll almost be like a doji on the day. And if under those circumstances, you probably have a pretty big rebound next week. Now, remember I said, the 86, 87 analogy, you had a pullback at the end of January and a pullback in early February. I think today is that pullback. And, there is this Friday syndrome where we have had Friday pullbacks before. And then the market rallies late. Sunday night, it gaps higher, and then it's all over, and the market goes up again. And, a lot of times, we've had minor versions. This is a bigger version of anything we've seen, but we've had days where we, probably finished down a couple 100 points or down 100 points or something. And then the next day, we go up and take that out. So, the big question is that going to happen again on a larger scale? You have to be prepared for the fact, and I don't know whether the time is right now or whether it's coming later in the year, but at some point, the same power that drove the market up 30% in 87 from May through July has yet to be unleashed on this market. And but what were the things that drove the market up 30%? I'll tell you, looking at them right now, the bond market was tanking, and I mean really tanking, much more than this market, and the dollar was tanking, and for 30% of the upside, that was what was going on. Eventually, the dollar and the market overdid it, and we had the crash of 87. But before that, there was a mania of upside mania of monumental proportions. So that hasn't, there's no way that's really been unleashed on this market yet in the way that it happened in 87. So it's right now it's not looking very good because we're starting to break down. So
can you see this daily chart I have up?
Yeah.
Okay, so
yeah, it looks
back in September we had this bullish cross. The CFMA1 got above the BBC, and we've stayed above it. There's been one close below the BBC since September of 2017, and it looks today like, there's still plenty of time for this to turn around, but this could be the second close since September, I think September 6th it was, roughly, yeah, September 6th. So, that's something.
What does BBC stand for?
Bull bear cross. When prices, when the CFMA1, the red and blue line, when it's above that green line, we're bullish and we anticipate higher prices no matter what time frame we're in. Yeah. And reverse for when it gets below, and it was demonstrated quite well earlier this week on the 30-minute chart. I pointed out that on the 29th we had a bearish cross here, and as long as this is, the conditions are bearish based off of a 30-minute chart, on the smaller time frames where we actually execute trades, there's no going long. I mean you can, because there will be a reversion to the mean. You get a leg and a retrace and a leg and a retrace and a leg and a retrace and a leg and a retrace. So you have to be careful that you aren't going short, just as the market is doing its normal healthy retracement, which keeps it rolling. But that bearish cross held through all the way to January 30th at about 11:30 p.m. or midnight. We got a bullish cross, we got a decent rally, took us right up to the zone, and then it rolled it over and took it, well, first this sell-off stopped at the zone, so then we rallied up to the zone, came back to the zone almost to the tick, overshot it just by a couple ticks, and put in this little doji here. It attempted a rally, and we could have put in a higher high, and we get another bearish cross. I mean, boy, is that a sign of weakness. So it it ping-ponged back and forth in this zone to zone to zone to zone, back up to the zone, and then back down to the zone. And that zone alone is worth a little over 200 points in the Dow. Every time it comes 200 down, 200 back up, 200 down. And so now we find ourselves below the lowest weekly trading zone on the Dow. On the S&P, we're still flirting with it right here. In fact, it's starting to move lower. So hang on to your hats, guys. I don't know of anything that could happen this afternoon that would change this. So it may be Sunday night. What are your thoughts? You think there's a shot this thing turns around today?
It's very look. Sometimes you can get a late rally, the last 20 minutes or half an hour or even an hour, but it looks very bad today. This is not good. It's it's really looking pretty. There could be some sort of a panic sell-off here right now. The VIXs are going higher, and the VIXs look incredibly bullish. And I've been talking about that for a while. They kind of look like they were getting ready for a very dramatic up move that could possibly take them up to 40 or 50. On the BXX, it could be really dramatic. So,
well, last week's lowest weekly trading zone on the S&P was down here at 57/58. So if this is going to drop, guys, since this is the lowest zone for this week, we fall back to last week and see. This is unusual, but this, if I were going to enter this trade on the short side, one thing is certain is that you got to be careful on your entry because you see the market can fall all day long and you can do nothing but place short trades and you still end up getting stopped out. I don't understand. The market fell all day. All I did was place short trades, and all I did was get stopped out. Why? Well, it's the timing of the trade. If the market goes leg, and then it does this normal natural retracement here, if you go short here, guess what? You're exposed, and you get taken out, only to see it go in your direction. So that's why being able to not only use multiple time frames chart-wise, but to be able to think. It's almost like playing three-dimensional chess. And it gives you, once you learn to hold those time frames side by side in your mind and understand how markets actually function and work, then you are able to see that high probability window where, hey, this isn't a home run, it's not a grand slam, I'm not knocking it out of the park, but it looks like a relatively low risk, high probability opportunity to place a trade. And that's all we look for every single day, are these small windows of opportunity where there's nothing in your way. You don't have to you don't have to fight. It's not hand-to-hand combat. I know all of you have got.
This is where we are right now is a potential rally point right here, and it could be a big one. If we do rally smartly from here, that would certainly make me feel better about this thing cutting some losses today. So I would reverse right here right now for a shot. But if we start taking out these lows, it's not going to be good. So that's it.
Well, the move going back to August, and this really looks at the last leg up because it embraces this bullish cross here. So this last leg up, so we had this little bearish cross, of course, that went nowhere. So that's why I'm measuring from here. We're approaching a 24% retracement. That's at 27.67. Now, if we close there, again, it'll be the second time since this was the first close. This could be the second. Go ahead.
You can look. Let's just suggest if we did stop, if we sort of turned somewhere around here and started going back up again. Can you see how bullish the market could get if it took out this pullback we just had? It would be like this is a kind of a recipe for going parabolic beyond this. In other words, if what happens on a day like today is a lot of people maybe get out or go short, and then they suddenly find the market's going back again. They got to chase it higher again. So under those circumstances, it could really go a lot higher. But at the moment, you've got to. I mean, the trend is now down, and you have to kind of play that way until proven otherwise. And we don't have to go positive today to necessarily turn for the market to turn. If by some miracle the Dow cut its losses by 200, that would probably be enough to say the lows might well be in, because it would be kind of a doji type reversal. So.
Okay, guys, on the S&P, it's a pretty good window right there. We're going to go. Now, Williamson, you had commented this big support at 2780. Okay, all right. Now, 2780. Yeah, I'm looking at it on a daily. There is support right there. There is right there at 2780. Okay, on a daily chart. I can see that. It was a retracement that held, and we haven't closed lower since then. There's been no close below that low, which was the low was actually at 2769 on that day. So everybody should take that into consideration. The Russell, man, really got kind of massacred this week. Today in particular. Last night on the alert we said to consider selling 1572, which right here, important prices, important areas, almost always tested. So 1572 down to 62, so we had a 10-point move. It's $500 per contract available, and then we get above the trigger, and down we go again, and this time we make it all the way to get down to 55. So 55, 65. So we got about a 10-point move and a 17-point move at $50 per point. Now Karen had made a good comment, and that was, she said, what's so enraging about all of this, back to when we were talking about politics, the Democrats not only spied and attacked Trump, they attacked the voting choices of millions of Americans. And those millions of Americans, their hide should be well chapped over this. In fact, what was that word she referred to a lot of them as? Wasn't despicable, but that there was some term that Hillary used to define a lot of the people that would vote for Trump. Somebody in the audience help me out. Oh, thank you so much. Okay, you guys all got it right. Michael and Karen and John and Williamson. Deplorable. Deplorable. That's what she called. And so she hurled that insult at Americans, and well, they showed her what they thought about that by electing Trump. So. Okay, so what else is important today in the world that we need to talk about? It looks like Bitcoin's headed for that $8,000, if it hasn't already, price tag that I was talking about, way back. Actually, we spiked 8,000 on this chart. We sure did. Maybe that's the turning point, guys. I don't know. If you go back and listen in December, this high and this low, we just spiked that thing. And if we don't grab a toehold here and start to rally, we thought 10 was going to do the trick. thought it could hold there, but I said, well, I hope it does. I hope it doesn't, go all the way to the 8, but it's now done it. Goodness, it put in a low at, on this chart, 75.86. Okay, so. Anything else you want to cover, John?
I think we kind of covered. Well, the lumber almost was up, actually limit up a short while ago. It's $1 off the limit right now, so kind of looks like it probably could go limit before the day's up. Might even go higher next week. The gold is the silver came back a little bit more than I would have liked, but the gold and silver are kind of holding in here. Although the silver's down a lot on the day, I'm still down 50 cents, nearly 44 cents. I'd be, I think if the silver went above 1680, getting back, or especially if it went back over 1700, I think you want to be long. But it's a little bit dicey still. But, even though we could close down here, we could actually open higher next week. The dollar's actually tanking as we speak. It's starting to make lower lows again on the day, and the grains are, the wheat and corn are acting quite well. The soy meal was acting very well a short while ago, but it's backed off a little bit. But if we rally into the close here on the beans, I think you have to be long going into the weekend, and it could be a weather thing as well. The weather is starting to get pretty cold up there across the Midwest. The lumber is $9.90 now. It's almost limit up. 9 times out of 10.
Yeah.
9 times out of 10, when a market goes limit up, I know it's a crazy thing to do, but you should be buying it, because what it's really telling you is everybody in the world wants to own lumber. That's why it's limit up. And most often, there's two things can probably happen. Either we're going to go limit up on Monday, which is, $1,500 profit. it's now locked limit up, or it could open $1 higher in reverse. It could open $2 or $3 higher. 9 times out of 10, you're going to make money. And if you put a tight stop when it is limit up, usually you can put $1 stop. You can risk a very small amount of money on that trade. And generally speaking, it's a very good risk-reward situation. So you have to sort of, buying new highs on lumber has been a highly successful strategy since it started hitting new contract highs about a year ago. So it's practically doubled in price. And the same thing is going on with cotton right now. Cotton is starting to rally really strong again. I got a feeling metals. I'm
sorry, you got a feeling what?
The metals, could end up. The currencies are really strong. We've got the euro at 120. Look at the Swiss. The Swiss is making new highs today. 108. I think it's the highest the Swiss has been. And the Swiss bank has a ton of U.S. stocks. They're up about 50 billion in profits. They could be selling, and because they're selling, that may be helping the Swiss franc, because maybe there's repatriating some dollars back into Swiss francs or something. So that because the Swiss franc has started to pull ahead of the euro rather dramatically, that's got to be very bullish currency spread type deal, and ultimately the strong Swiss franc is very bullish for gold. So remember, you had this phenomenon where the Swiss went from about $1.05 to $1.40 in one day a few years back, and then or it crashed rather. It ran up and then it crashed, crashed about from 140 down to 105 or something. And it's taken years for the Swiss franc to recover. But remember, when you have these vacuum declines, you tend to have a vacuum incline, and we could be. I think actually being long the Swiss franc is I wouldn't call it a safe bet right now, but it's a pretty good bet in the sense that we could be in for some sort of a very big surprise up move. And if that happens, that could coincide with a move up to 1400 on the gold, something of that caliber, or maybe even higher. And that's the way things seem to be shaping up. Look at the pound. We hit 142 a few days ago. We're almost back there. The euro's right up there. The Swiss is right up there.
The pound, even the peso. It's been so long since I looked at it. 6B. Yeah, there it is. I got it. Okay, this is a daily chart, guys, of the British pound. 6B8 H8. Okay. We don't need this. We'll get rid of it.
And the Japanese yen is also going up quite a lot, which is also helpful to gold.
So yeah, this British pound's really been on quite a tear. We got a bullish cross back November 22nd of last year. We got a leg and a retracement and a leg and a retracement. And you look at this, we just put in just a slightly higher high. That's the definition of a trend. Well, you know. And then, all important, we took out this swing high on this day. Again, this is a daily chart. So, bullish cross back in November, and although we've reverted to the mean, pull back to the bull-bear cross, pull back to touch it. But for us, that pullback to the BBC, our entry comes on the open of the next candle, plus one tick. Okay, and then it just kind of been a runaway for the last couple weeks here. You got a little bit of a pullback, and now we're approaching that previous swing high. So what are your expectations for the pound, John?
Well, if we get above if we get above 145, 144, 145, boy, you could go all the way back to 150. And remember, that's where it tanked from. About 155 was where it tanked from, and so the rebound could be pretty spectacular. And there's a lot of mixed signals about the Brexit and everything, and look at the way it's taking back all that down territory.
I mean, this is a weekly chart I'm on right now, and I went to the continuous chart so we could see more of it. On the weekly, we had a bullish cross in May of last year, May 5th. Bullish cross, price pulled away, price pulled back to physically touch, up close by the open of the next candle, plus one tick, and leg and a retrace, and a leg and a retrace, and a leg, and I don't know, guys. It does look good. Now, where's this? What's behind this move?
Well, take more time to leave the Brexit, and the fact that there actually could be another referendum. That's a real possibility now, and that could change everything. And look, they may ultimately renegotiate some sort of a deal with Europe. Where they kind of have all the benefits without the baggage, that would be great if they could do that. And there's also this idea about turning the UK into a kind of a tax haven. I mean, one of the things about Trump's tax deal is the rest of the world is starting to say, I'd like to do this as well. So it's kind of created a model for the rest of the world. I mean, it's not talked about at all recently, but Russia in the early 2000s, when they dropped their tax rate down to 13%, the economy took off, and Russia became very, very rich very, very quickly. As a matter of fact, the market went up 100-fold from the November bottom, which we called, as you may recall, that was the time when I can still remember the videos. They had people lines outside the banks and people banging on the bank doors because there was it was a minor crisis at the time. But that was the bottom. And I remember seeing, when they started the first rockets carrying the first pieces of the space station up into space. I thought that was a very, kind of reminded me what might happen to the market in Russia. And we actually put out an alert in November of 1998, said, if you don't have anything in Russia, buy at least, if you can buy 100% of Russia, go for it. But if you can't bring yourself to really do that, buy at least 10%. And the fact of the matter is, in 10 years, the market went up 100-fold, right up from 98 to 2007. Market. That's why all these billionaires got created in Russia, because the market went up so much. And coming from a communist country to going capitalist had an absolutely monumental effect on those lucky enough to be exposed to some asset, some sort of upside on the upside of assets. Because in 1998, Russia was kind of a disaster. It took all the it took from 92 to 98 to really kind of get its act together, and sort of go from being a communist state to a capitalist state. And to a certain extent, China has happened to China around about the same time, because China really took off in the early 2000s as well, in the same way. And maybe that's the ray of light for North Korea, because that's why I can't understand why this guy doesn't get the memo. He had a 10-year war in Vietnam, and the Vietnamese are now our allies, and they are a raging economy that's gotten the China bug, and they got the memo. It's all about the money. So, I mean, can you imagine if the Koreas were able to combine in a friendly way? And I mean, it would be like East and West Germany. You'd be creating another powerhouse on the Korean Peninsula, or you'd be multiplying the powerhouse potential. So
you want to talk about time flying? Think about this: the Berlin Wall has been down longer than it was up.
Yeah, that's something I didn't think of that, but that's quite a thing.
Yeah. Are you familiar with the President Trump coin?
No.
I didn't know there was one. It was just brought to my attention by Michael P. President Trump's trading at 0.04, up 900% on the day. Let's see. Oh, I guess it hasn't been there that long.
Is that a 1 penny coin or what? I guess it is.
Well, it's trading at 0.04. Now, volume in 24 hours has been 1,351,000. And why does it say $6.09 next to it? Because if you multiply that number times 4 cents, you're going to get a much higher number here. I don't know. This is the first time I've seen this or looked at it. Michael, is this something you've been following? Do you have any more information on it? Oh, and I don't know if I mentioned this or not, John, when you're talking about lumber in the winter, the groundhog saw a shadow today. So 6 more months of winter, early spring.
6 more weeks.
6 more weeks, yeah, I'm sorry. Yeah.
6 more months. We're really being an ice age.
Yeah, no kidding. No kidding.
Wouldn't that be something? Okay, well, listen, have a great weekend and a great Super Bowl, and we look forward to coming on Monday.
Okay, I'll talk to you then. Have a great weekend.
Bye-bye.
Thanks for everything.
You too.
Bye-bye.
Bye.
Huh. Okay. Bob, you say 6 more months in Canada. Oh, it's yeah. You're okay. I got you. 6 more months. Now I get it. Michael P says no info. I just track the daily trending on CoinMarketCap.com. Yeah, that's not a bad resource. In fact, I'll show it to folks. CoinMarketCap.com. I've been there before. Okay. Well, we want to sort by percentage gain. That's where it should show up, I would think. Yeah, I don't know. I'm not sure what the point is, Michael. Like I say, I had not heard of it until you brought it to our attention today. What I'm trying to figure out is here it says that percentage. Oh, that's the percentage change in 3 months. Okay. All right. How about today? What's the percentage change today? I'll be right back, guys. 1 second. Oh, my apologies. Sometimes that's the truth about life. All right, so we'll follow this President Trump business and see. It says on the day here it's up 900%. Okay, I wasn't hallucinating. One day, 900%. But then when we jump over here to the corn market cap, where we look at change in the last 24 hours, okay, it starts with the with the greatest change and works its way down. And I don't see that rascal. Let's see if we can bring it up under the symbol. P-R-E-S. Yep, right there. Okay, now this shows us trading at 17 cents. Wow. It's a pretty big difference. It's been as high as $4 back in January of last year. Well, this might be one to keep an eye on, but do your due diligence. Go here, trumpcoin.com, you know, and see what it's all about. Can you hear me now, Karen? Yeah, I had to put it on mute for just a second. Can you hear me now? Can you hear me now? Can you hear me now? All right. Sorry about that. Yes, I was talking endlessly, on and on. I said that on this chart, on the 1 day, we showed at 4 cents, up 900%. But when we go over here to the coinmarketcap.com, we show it being up almost 18 cents, or we show it trading at 18 cents with a 3,261% jump today. Now, look at the supply. That's a really big number, huh? Okay. Now, it did trade last January as high as $4. Oh. Sorry, one more minute. All right, let's get this done. It's Friday. You guys want to go outside and play? I understand completely. What we were doing here, we were looking at just this last little leg. This area here. Oh, let's call it 2770. Let's call it 2778, just to be very conservative. 78 down to 73. Okay, that's a 5-point move that I think, if triggered, if you get stopped into it, live radio trade idea. Okay. Okay, so 2777. Maybe it's 73. So we'll go 78. $27.78. To $27.73. If the opportunity presents itself. Long side, there's so much congestion overhead. Honestly, I can't think of anything that would put me into a long trade today, given the current conditions, situation, and all that jazz. All right. So we know that last night, if you didn't get a chance to grab a screenshot, here's one more shot at the shot. Okay. Right. So the S&P, consider selling 2807. The initial drop, 10 points. Important prices, important areas, almost always tested. Back above the trigger. And then we take a 20-point drop. It's more than 20 points now, but at the time it was 20 points. Now one says no bueno, and the other says muy bueno. That's based on a 30-minute chart. On a 30-minute chart, your stop loss needs to be, on the Concierge Trade, you need to be here. Okay, your stop loss needs to be right about here, maybe 28, 22. Now, you may have a trading strategy that embraces that much risk, but remember, whatever it is that you're willing to risk, you have to be able to see the potential for at least that much profit. There are trading methodologies out there, systems, websites, emails, where they have you trading maybe the S&P, and by using a 10-point risk, you can almost always get your 2 points. Yeah, that's bad math and bad science. I don't deny that, if you have a basic idea of what you're doing and how markets work, that with a 10-point risk, you should get your 2-point goal, I would think, a high percentage of the time. But stack up a couple of tough days in a row or a couple tough days in a week, and wow, I mean, if you're taking 2 points, at the end of the week you've got 10 points, but you're risking 10 points on every trade. I mean, I think you can see how that just doesn't make sense. So, rule of thumb, carved in stone, never ever ever risk more on any trade than the realistic profit potential. And if you don't know how to determine realistic profit potential on any given trade, you should become a partner. Or you should take the free trial. You should sign up for a one-on-one mentoring session, and I will try to help you with that, if I can. Yes, Bob, I will send you that email. Gary says, I could not and would not trade the S&P in the past because I could not make it work for me. After learning from CFRN, all of that has now changed big time. The S&P now might be my favorite market. Well, golly gee, Gary, I am excited and happy for you. Now, there's a lot in what he just said, because most people who come into the futures market want to trade the S&P. That's what attracted them. Maybe for some it's gold or, live cattle, but by and large, everyone that I talk to, I'm going to say 80%, their initial goal coming in is to trade the S&P. And I always go, why? And then there's always like this, awkward silence. It's because they've heard that that's, the big daddy, the liquidity, all these different things. And all of those things are true. You can find someone to take the other side of your trade, one tick away, no big spread, one tick away, pretty much anytime the market's open. It's rare that the spread between the bid and the ask on the S&P is more than one tick. 2 in the afternoon or 2 in the morning. Okay? And there's volume. But it doesn't necessarily make it easy to trade. In fact, there is no easy button in trading. But as Gary has found out, that when you apply some basic chart reading ability, along with our way of looking at the market and the weekly trading zones and our indicator set, and then even layer in the Concierge Trade Alerts, boy, it can really go a long way towards making it simple. It can't do easy, but simple is possible. All right. Okay. But thank you for sharing that, Gary. I'm really glad that we were able to help you. And, you know, I don't take that lightly, because teaching someone to trade, and I'm not saying that Gary didn't know how to trade before he came. I'm just saying he said that we helped him with the S&P, so that's great. But teaching someone to trade is kind of like teaching someone to drive. You know, you're going to have an impact on their life, 50 years from now, though, depending upon how old they are, of course, but 10, 20 years. If I can teach you some basic truths about the market, and then you can go and vet those for yourself so that they become your truth, not just my truth. If somebody were to ask you, if somebody said to you, wow, man, what you just said, dude, that's smoking hot smart. Why is that? Why do you believe that? I mean, it sounded so great. My ears are burning. Tell me. Why do you believe that? I heard this guy say it on the radio, and he kind of sounded like he knew what he's talking about. So, yeah, that's not a good reason. I want you to listen. I want you to take notes. And then I want you to go try it out, so that it's not my truth, but it becomes, through the vetting of it, rolling up your sleeves, getting your own hands dirty, it becomes your truth. And that's huge, and that's important, and that can be a life-changing event. Gary says he's 66, so he knows he's got another 50 years coming, bless God. So, he's looking forward to it. All right, let's run through these real quick, and then, I got to get out of here. All right, on the Dow, we said to consider selling 260.20, 26,020. Now, did we blow through the lowest weekly trading zone like nobody's business? Yeah. Have we looked back? Not much. Here, we tried to get back above the trigger, but you can see what got in the way. All right. Now, I mean, why not? Now you're just sitting here kind of wondering, going, man, important prices, important areas, almost always tested. It tried to get back above the trigger, because a lot of people who are trailing their stop, these numbers I put on the screen, that's what the market made available. But you can't have it all, not if you're going to trail your stop. Because if you're trailing your stop, when the market goes the other way, it's going to take you out. And that's the whole point of trailing your stop. So letting the market take you out, not taking yourself out prematurely. Okay? So it's like, oh man, so close. But if you have the Concierge Trade Alert, and you also have the indicator set, then you have the ability to see things a little bit differently. Now, so now do we have a scenario where it's almost as good as if it went up there and got above the trigger and then came back down? Well, if you understand our trading methodology, bearish cross, price pulls away, price pulls back, down close, sell the open of the next candle, -1 tick. If you understand that, then yeah, because you see that this is a continuation just of this. If you don't see it now, if you haven't seen it in the past, now that I've brought it up, you'll begin to see it in the future. You know what? No, I'm going to leave those there so we can take a look at them again next week. All right? Okay, so we get that bullish cross yesterday afternoon, and we did run up here and tag that zone. And you got a bearish cross on the way back down, and it will take a good rally at this point just to give us an opportunity for a bullish cross. Now, if price begins to stagnate and go sideways, right, this will continue. So point of contact could be way down here, but a good rally this afternoon, point of contact could be here. And at point of contact, you have to assume that's going to be good resistance until proven otherwise. And once it proves it is good resistance, then that's when you take action. All right? Okay. Signal candle, trigger candle. So 160, and if for some reason you did not get stopped out on this pullback, it ultimately went, well, it's gone more than 265 points now. But most people trailing at some, whatever distance you're trailing at. See how the the step line crosses on the back side. We're in a short trade, and the step line has crossed to the north side of the CFMA1, and then we have a bullish close. That's, if you're using the indicators in conjunction with the concierge, that is your exit right there. You take what you've got. It's not all that you had. Now, if you stayed, could you ultimately get more? Yeah. I mean, if you're willing to risk, giving back what you've earned because you think there is, more room to the downside, then you can certainly do that. All right, let me pick up the pace here. The Russell, we said consider selling 1572. Initial drop was 10 points, $50 a point, $500 per contract available. The next drop, 15 times 50, that's $750 per contract available. On the NQ, here is the lowest weekly trading zone. We bounced off of it a couple of times, and now we're taking it out along with the rest of them. All right, consider selling 69.10. This move, this leg, was good for $1,300 per contract available, but we never get out at the swing high or swing low because we're trail a stop. So on this pullback, you most likely were taken out. Okay. If you weren't taken out, if you are still in the trade, then I guess you have a pretty big grin on your face. On gold, last night we said consider selling 13. Well, actually, I typoed it. I said sell 146, which to some people made absolutely no sense, but the buy side of that was consider buying 1359 if you're given the opportunity, which we weren't. So 1346. It's a $4,500 drop. But I did make a typo. So in fact, I left the typo just to let you know I made a typo. And I saw the email from Lars. Thank you very much for notifying me, Lars. Unfortunately, I didn't see it until this morning, and it was that ship had sailed when I saw the email. Okay. After gold, we got bonds. Consider selling 146.02. First drop was good for 9 ticks at 31.25 per tick per contract available. So we're talking about 180 bucks per contract. Okay, that's what the market made available. Then important prices, important areas, almost always tested. We get back above the trigger, and down we go again. $1,000 per contract available. Now this is a pretty good pullback right here, right? So depending upon how closely you were trailing your stop, you may not have been in the trade still at this point. Soybeans, consider selling 983. First move down was good for 4 ticks. Then we get back above the trigger, and when I measured it earlier, it was down 4.5. Looks like it's probably down. Well, let's see. The low here call it 978. So maybe it's 5. So that's it. S&P. Oh, we're getting into that area. Look at there. Look at there. 2770. Okay. There's a potential profit target. Our best estimation. There's a potential profit target at 2773. So from 78 to 73 is 5 S&P points. At $50 a point, it's $250. Now, you don't want to risk more than how much? That's right. Now, trailing your stop, you could end up with more than 5. You could end up with less than 5. You could end up with a big nothing, all right? But here's my point. Where are you going to put your stop? Let's go real quick over here. Just one moment, guys. All right, we're going to take one more shot at this and wrap it up. All right, let me make this an ES real quick. And let's get it on a 4-tick range. Okay, price pulled away, price pulled back, down close. Sell the open of the next candle, -1 tick. The only issue I have with this is the fact that I'm selling into a rising CFMA1. So this steps outside of the hard and fast, carved in stone rules. And for me, this is a matter of preference. Okay. Now, if I passed on that because of my own personal preference, when I see this candle or possibly this candle closing below the CFMA1, which could have been good support. Oh wait, it was. Oh wait, it was. Oh wait, it wasn't. Good support until it isn't. Okay? So, am I saying that I would have considered entering here on the open? Or maybe as I take out these two lows? Yeah. Well, what about waiting till down here? Well, yeah, that's a possibility too. But now what you risk is you're getting into the trade so late that you've got more risk, and if it decides to pull back to the BBC, and if you're entering, you know, like here, you got 8 ticks, you know, and that looks like what it's doing. It's pulling back one more time. Could you have sold it on this down close, the open of this candle, -1 tick? The candle open at 27.78 1/4. So you'd have sold it at 27.78. Now, this is taking out my whole personal preference thing. This is just by the rules. Price pulls back, physically touch, down, close, sell the open of the next candle, minus 1 tick, 27.78. Use an 8 tick hard stop. So if you use a 2-point hard stop, 8 ticks, then yeah, this candle opened at 78 1/4. Yeah, the thing dropped 78 1/4. So yeah, you want to sell it at 78. Yeah. Which puts your stop, if you sell 78, you got an 8 tick hard stop, put your stop right there. And that's the trade that we thought might work out. From 78 to 73. And the low so far is 72.50. So it did the 5-point move that we thought that it had the ability to do. Brian, this is quite a shot away from moving averages on a 30-minute. We'll see some short covering, but boy, are we down. Brian, I'm not sure I completely follow, but anyway, this is a 30-minute chart. Okay, this is what we trade in the live training room every day, the range chart, where every candle is exactly 4 ticks tall. Now, did it follow everything that we were anticipating and looking for? Absolutely. Now, you suggest that there will be some short covering. Okay. Okay, people are short. Now, what's your motivation for the where did you come up with the idea that, yeah, I see the bounce, but if you want to cover it real quick, why do you think there's short covering there? What brought in short covering? Maybe we use that term differently, but if you could maybe define it for me, I'd be happy to. I'd like to share it with the office. I'll give you a chance to type it in. Well, if we go through an area in a bit, it may stay down under resistance and not today. Yeah. Maybe you could shoot me an email with a little chart whenever you have a chance. I mean, if you want to, and point out what you're referring to, and then we can talk about it on Monday. 86 might trigger a pop. 86. Up here. Yeah, unfortunately, if 86 triggers a pop, we're going to run smack dab into this zone at 97.91. And because even though it's the lowest weekly zone, now that we've breached it by this degree, first time back up, that's going to act, based on historical observance, as very good resistance. And depending upon the amount of time that it takes to get there, it could run into this zone, if it bounces, and this trend line. So I'd be happy to take a look at a chart. If you want to send one over, support at cfrn.net, and then I'll show it on Monday, and we can kind of go through what your thought process was, and that might be beneficial to some folks in the audience. So thank you for sharing that. Oh, thank you very much. That's kind of you to say. Okay. All right, we've run through them all, guys. Everything, you know, some days it's like I'm just not worthy, you know. This is proof that occasionally good things do happen to good people. So, good for all of you. This little double top we put in here on gold. Rolled it right over. Now, check out the core. Bounce, set a bounce, and take it out. See, support, support, not support. See, the market tried to rally on the next candle. Resistance. Back up, resistance again. So, I know this sounds funny, but that area will remain resistance until when? Until it's not. That's right. And on the way down, of course, this 1331.32 on gold would be important only because of this swing low, right? But ultimately, if it looks like it's heading for 26.27, which is the lowest weekly trading zone. All right. Bonds. So 146.02, the first move down was good for 9, and then the second move was good for $1,000 plus per contract available. And soybeans, 4 ticks, $50, 4 points. 4 points at $50 a point. So that's like $200, $250 over here. Important prices, important areas. Almost always tested. On the S&P, Brian, no. Actually, this week, that is our lowest weekly trading zone. I looked back to see what it was last week, and last week, the lowest weekly zone last week, I talked about this earlier, is 57.58, and that's why I put this little rectangle in here. Okay, now that's last week's lowest weekly trading zone. And that played a part in putting this little trade together here. I mean, we mapped it out, and so anybody that maybe missed it, you can go back and look at it, or maybe you saw it, but you want to see it again, because it's nothing unusual. There's no magic, no voodoo. It's just how markets work. So. I'm sorry, Jack, what were you saying? Add volume to the candles and see if covering is taking place. Well, adding volume, okay, what does that, I'm not sure. You're going to have to explain to me what you mean. If you add volume to the candles, you can see if covering is taking place. You'll have to teach me how to do that, because I don't know. Maybe shoot me an email and we can discuss it on Monday. How about that? Okay. All right. See, when a transaction goes through that is a short, we use my terms carefully here because this is an important thing. Okay. You always have to ask yourself, is this person closing a position or opening a position? If you just see that I sold 27.65, you don't know whether or not I'm closing. Let's say I had been long and I went long for some reason, and at 27.65 I get stopped out. So that's going to show up as a short sell. If I initiate a position to go short, at 27.65, that's going to look identical. I hope that makes sense. There's no way to differentiate the two. It's kind of like when I say if I take away these prices and I take away this stuff across the bottom, just looking at the candles, there's no way to know if this is 1 minute, 1 day, 1 week, 1 month, 1 hour, because the markets are fractal in nature. Now, is it going to turn on a dime at the bottom of the box? I don't think so, but hey, who knows? The Dow plunges 500 points. Man, this is quite a day. Quite a day. All right. Last week's lowest weekly trading zone on the Dow was 255.65/255.70. 255.70. This is last week's lowest weekly trading zone. Bottom of the box got a little flash of green there. We'll see if it lasts. Let's see. Okay, Jack, that sounds great. Jack's going to explain what he was talking about with the volume on Monday. Brian says, I think this is using the dossier memo to hit this so they can buy back in. Yeah, it takes an awful lot of money to move the market in any one direction. But I'm not discounting, the concept and the idea at all. I've sat and figured, how much money would a firm have to deploy in the face of any given market situation to move it. Well, I'll give you an idea of what I mean. And then I gotta run. So I wish I could hang out longer, but I can't. Go a little gear right here and auto sum bid ask. All right. So let's say we wanted to navigate price somehow down to 27.74. All right, we would have to sell 3,500 and whatever contracts in an attempt to push it lower. I mean, that would be the bare minimum. Now, are all the people who have inventory showing everything they have? Well, this guy might actually, or one of these guys, could be showing 10 contracts when in reality he wants to deal at 100, but he's only showing 10. I mean, we could go into all kinds of different explanations, but when you start thinking about it, the amount of money that has to be put up per contract, to try to move the market in any direction. Now, in thin markets, like on holidays, and sometimes even on Globex, a small amount of volume can move the market a considerable distance. I've seen it. But a day like today, it's not impossible. It's just very expensive. So, and do some institutions have pockets that deep? Oh. Yeah, I don't think Goldman Sachs will have to go without their lunch today, even though they didn't do quite as well last year as they've done in previous years. On a typical year, Goldman Sachs only has 3 to 5 trading days where they lose money on their trading desk. How would you like to have that kind of consistency? Yeah, me too. All right, guys, it is the weekend, so CFRN law states that you must spend quality time with your family. Of course, I'll see you all in church on Sunday. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.